Euro dollar. So the euro continues to be very well capped into rallies, with a lower top now sought out at 110.60 ahead of the next downside extension below recent lows at 107.11 and back towards the December base at 105.21. At this point, only back above 110.60 would compromise the immediate bearish outlook for the euro. Sterling dollar. So cable has broken down to its lowest level since 2010, with the market now trading in oversold territory and potentially at risk for some form of a bounce before we see any resumption of declines of this intense downtrend. At this point, look for a correction potentially back towards the 150 area, from where a fresh lower top is sought out ahead of the next downside extension. Only back above 152.40 though would compromise the immediate downtrend in this market. Dollar yen. So dollar yen is broken down to fresh multi-day lows, is now closing in on that key August base at 116.12. At this point, daily studies are a little bit stretched, though there is risk for the market to test this 116.12 low before we see any form of a bounce. But if we do see any rallies in the interim, they should be very well capped ahead of 120, while ultimately only back above 123.76 would take the immediate pressure off the downside in this dollar yen market. Euro Swiss. So Euro Swiss continues to trade within a very tight contraction range, with the market though showing a contraction in volatility, potentially warning of some form of a breakout in the sessions ahead. At this point, the broader recovery outlook is favoring additional upside beyond the September peak at 110.50 and towards the 115 area further up. Only back below 107.15 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie is traded all the way back down to those recent multi-year lows that were set in September of 2015 at 69.08, and at this point deeper setbacks are favored below that level towards the 65 area further down. The market is looking a little bit stretched over the past several days, however, and we could see a bit of a bounce to allow for some corrective gains before a resumption of declines. Look for any rallies from here to be well capped ahead of the 72 handle. Dollar CAD. So dollar CAD continues with its surge to fresh multi-year highs and now closes in on a retest, or trading just shy of the the July 2003 high at 141.94, 190 in the 141.90 area, where we've sort of stalled just around there today thus far in early Monday trade at a 141.89. 142 represents a measured move objective off the latest breakout after the market had been consolidating between 140 and 138, and so that opened a 142 objective, which is where the market's trading up to right now. So at risk for any additional meaningful gains beyond 142 at this point are limited ahead of what should be some form of a sizable corrective decline before the market considers a bullish resumption. Look for any setbacks though to be well supported towards the 138 area. Kiwi dollar. So Kiwi continues to extend its declines after stalling out late 2015 ahead of 69, where there's some critical medium-term resistance, and the market is now focused on next key support in the form of that low that we saw down at 64.29 going back to the 18th of November. At this point, look for any rallies to be very well capped ahead of the 67 handle. SPX 500. So the S&P 500 continues with its intense downside acceleration, continuing to show signs of the formation of a major top, and is now focused on a test of next key medium-term support in the form of the low that we saw back on the 29th of September at 1870. At this point, any rally should now be very well capped towards 2000. Gold. So gold has finally shown some signs of the formation of a meaningful base after last week breaking above 1100 and establishing a daily close above 1100. This suggests that 1046, those multi-year lows that were set back in late 2015 in December, are now establishing a base, and this opens the door for a fresh acceleration of gains, potentially back up towards the 1200 area over the coming days and weeks.